to that, after they disconnected the gold anchor to the dollar in 1971, little known is that the owners of the Fed have granted themselves near 0% loans for perhaps 20 or 30 trillion dollars. That's a theft. Okay, in the wake of the Lehman incident, Alpha, Ron Paul demanded, as part of a financial regulatory bill, he said, okay, we'll put our support behind this, but we must have an audit to the Fed. There hadn't been one in, I think, 20 or 30 years. What it revealed is that right immediately after the Lehman incident, the owners of the Fed gave themselves $23 trillion in very low interest loans. And my guess is they'll never pay them back. That's pilferage. Okay, this is what central banks do. They also have like an assigned, I don't know what to call it, manager. It's the New York Fed. The New York Fed is the most powerful of the Fed governor posts. And the New York Fed is involved with insider trading with all the Wall Street banks. The New York Fed is involved with tipping off the Wall Street banks on Fed policy toward interest rates. The New York Fed is involved with what I believe to be the gigantic slush fund. Just look it up. I'm not going to talk about the ESF. I regard it as the back, not garbage can, but the back slush fund of the Fed. And it could have over 10 trillion in it. Okay, this is what the central bank has done. They've ruined the free market. They set prices, they do insider trading, tipping each other off, and they give themselves gigantic loans. All right, that's just like a quick primer for central banks. As for gold, anyone who thinks gold is tarnished or no good, I got news for you. You're an absolute moron, okay? If you don't think gold is good, if you don't think gold is fair, if you don't think gold is like unencumbered and therefore bad, if you're one of them and then you say, oh gosh, it's never done anything, it's a barbaric relic and it doesn't earn any interest rate, you're an absolute moron, okay? Absolute moron. Let me give you a story about a lie by one of our icon cabal leaders named Warren Buffett, Berkshire Hathaway. I remember it was like yesterday. 2003 or 4, he ended up with a big controversial sale of silver, and he lied. He lied to his shareholders, he lied to the press, he lied to the American public. He said, I sold silver too early. I sold it at $7.75. Well, what a convenient number. Is that not exactly a futures contract after writing covered calls at a strike price of $7.75? He got called away. He was earning fat income on his 130 million ounces of silver. Fat income, writing covered calls. And he got called away because it went up too much and he didn't want, okay, here's what would have happened. It was like 9 or 10 at the time, early 2000 decade. Let's suppose that he wanted to keep it all quiet and buy it back and not lose his gold in an embarrassing manner. He would have had to buy it back at a loss, covering his covered calls, buying back his covered calls, which meant he sold it at 7.75. He's got to buy it back at 9. He loses $1.50 per ounce on 130 million ounces. That's a $200 million loss on something you own, Warren, you big fat liar. So he didn't want to do that. Instead, he lied, and the American public gobbled it up because they're largely stupid. But my hat trick letter subscribers are not stupid. They're very smart. They're about 10%. The potential market is about 10% of the public. And what I put out was he got called away after writing covered calls for his silver. It went up too much and he did not want to buy it back for a big loss. Imagine Berkshire Hathaway putting down a $200 million loss on something they own as an asset. How does that happen, Warren? writing covered calls and getting called away. All right. That's one story that belies the claim that it earns no income. Warren was earning 7% per month. Okay, that's what you get for writing covered calls. 5, 7, 8% per month. Now, let me get a quick lesson to bring in the importance of gold. When we broke away alpha in 1971 from a gold-backed currency, it was called the Bretton Woods Accord. We abrogated it. Nixon did it. France forced it. Charles de Gaulle was in on this, not in a bad way. He was asking for gold in return for treasury bonds. He said, I don't want this paper. I want gold. And remember, 71, we were embroiled in Vietnam. You were too young. How old were you in 1971? Oh, you were a twinkle in your parents' eyes. I was 19. We were dealing with our first trillion in debt as a country, as a government. And we were floating it, and the interest rates were going up, and gold was starting to go up. And Charles de Gaulle demanded our gold, and we said, screw you, we're not giving you our Fort Knox gold. We're going to close the gold window. That's the terminology, which means you can't convert your treasury bonds, U.S. government debt, backed by nothing. And we went quickly to 2, 3, and 4 trillion. Quickly. It took years, but it was quick. In geologic time, it was lightning quick. All right. So when we broke away from the gold standard, I ask a tough question, and I mean this in a didactic learning manner, Alpha. What is the dollar? Because the dollar has been this Federal Reserve note ever since. What is the dollar in more, let's say, practical terms with linkage to our government financial structure? The dollar is the backside of a coupon debt note. The dollar is a denominated coupon for the U.S. Treasury. The dollar is a treasury bond broken down into $1 units, $5 units, $10 units that you can use as legal tender. The dollar becomes legal tender and is actually, in a practical sense, a treasury bond coupon denominated in low levels for commerce. Okay? Since 1971, that's 53 years. Our dollar has not been money. Have we had some problems? Have we had some vicious cycles? Have we had crises in the credit market like with Lehman in 08? By the way, I forecasted Lehman's decline and failure 1 year in advance. I did it with the credit default swap, which is a bond insurance for credit for the Lehman Brothers financial bond, their corporate bond. Okay. And right now, the U.S. government debt has a credit default swap in the neighborhood of 100 basis points. So we're about to see a debt default. Now, here's the point. When the dollar is basically a bond coupon for commercial purposes, what is gold? The Constitution says gold and silver are money. So our illicit rogue government with our illicit rogue money, it's not money, it's legal tender. They have now set up a system where they're holding down the price of money, gold, and they're losing the game. And we're going to have a very radical repricing of the assets which represent money. When the bond default occurs, Alpha, gold will be repriced multiples higher, and so will silver, because it's money. And if you look at it from the other way, you could see that the bond is going to be downgraded. The bond is going to be devalued. And in the face of the devaluation, gold will go up higher in that devalued denomination, the dollar. We're going to get a new dollar. And there's a lot of talk. I believe we're going to get the Treasury, the U.S. Treasury dollar, the Treasury dollar. It's going to be gold backed. I believe we got a lot of forces and factors and assets waiting in the wings, and they're not going to come into the arena until the Biden show is removed. That's their condition. There are a lot of players here, internationally and with the United States. It's not just the Biden show has to be cleared out. It's the Davos clan, the Rothschild bankers, the Geneva cabal. They have to be cleared out. We have to see their financial status zeroed out.
Now,
because
Jim,
with trillions, they can make phone calls and cause wars.
Now,
go ahead.
With that, Jim, and man, you're brilliant. Like Ron was absolutely correct in your brilliance. So shout out to Ron. Thank you for the connection. Do you see us seeing this happen prior to the election, or do you think this election gets stolen? That creates chaos, and then we see this post the election.
This is the big question. I've given this a lot of thought in the last couple of months, Alpha. I don't have a crystal ball, but what I do is I look at factors. Back in August and September, I was looking at 7 different vectors, and all the vectors were pointing toward some kind of a conclusion by October, November. And the conclusion was to reveal the brokenness of our system, in plain terms. In particular, it was to reveal that the Treasury bond market was broken and facing a default, very serious risk very soon. Okay, so I'm done with my vectors pointing toward October, November. That turned out to be rather fruitful and accurate. And a lot of other analysts have said something big happened right around November, give or take. And some have cited my vectors, but they've got their own analysis, and they say we're at a tipping point. We're at a breakdown point. Now, we've arrived at that. That is a given. That is now an understood comprehension. Now the question is, how long do we have before the system breaks? And I've given this a lot of thought. Let me just mention some of the symptoms because they're scary. Okay, here are just a few. I'm going to lead up to the pièce de résistance at the end. My second language is French. It's not Spanish. By the way, I got my junior year high school French award. How's that, huh? Pretty cool, huh? Yeah. All right. Pièce de résistance is going to be my denouement, my conclusion. After Silicon Valley Bank went bust, the Fed set up a bank term lending. Oh gosh, I've got it written down here. Bank term funding program. I got it on the wall. Let's just call it the bank term funding program. All right. Let's just call it the funding program. The Fed set up a funding program. What for? For all the banks who are in trouble. Well, what are they going to do with it? Well, they're sitting on bonds that are destroyed in value. They're down 40% and more. They don't want to sell them. If they did, they would cause a Treasury bond default. They're sitting on 700 billion in unrealized losses. Why are they not selling? Because it would cause a treasury bond default. They're not selling because it would cause an avalanche. So the Fed and the Department of Treasury set up this bank lending program. I call it the waiting room for bankruptcy. And the waiting room is a fishbowl. And we get to see how much money is going through that room. It's a waiting room for dead zombie banks. And it's reaching $1 trillion. What's unique about it? Well, the banks can borrow money against the original value of their bonds. It's down 40%, but they can borrow against the original value of their bonds. Who's the idiot who's lending them the money? You are. It's the government, the Biden show. They don't want the big banks to sell off all their deeply damaged bond portfolios marked to the market because it would cause a treasury bond default. Okay. All right. That's just one symptom. All right. Here's another one. The repo window. For those who don't know, banks borrow and lend within the repo window. It gets a little messy with the reverse repo. I don't want to get into all the particulars, but it is a means by which the Fed adds liquidity and drains liquidity. And right now, there is a rapid decline in the repo window. It is pointing, if you extrapolate, which means continue with the straight line for what is being exhibited. It looks like March. March, it runs out. That could be previewing that March we have an escalation in our credit crisis. Okay, let me just mention a very unusual theory of mine. And are you limited by what you can say for censorship? I didn't ask that before we started.
You can let it all fly.
Very good. Let it all fly. In late 2019, the repo window blew up. And that is the liquidity arm for managing the big Wall Street banks. It got up to $1.4 trillion per night and was not in the news. Your news has no news. It's public opinion shaping and crowd control. Propaganda by the bankers, now the doctors. The repo window blew up in late 2019. October, it got even worse. I told my clients we're going to have some kind of a dollar event in the next few months because the repo window has blown up. And we got Corona. With Corona, we got a quick 5 trillion, then 4 trillion, then 5 trillion in COVID stimulus to the banks because they locked down the economy. We got Corona in response to essentially the onset of a treasury bond default. They decided to switch lanes. No more the banker lane. Let's move over to the doctor lane, the medical lane. And with the medical fear telling you that you might die from a common cold, you're going to have to take a deadly vaccine to destroy your immune system that opens the gate for strokes, heart attacks, and cancer. They're going to induce you to do that. If you're, I don't want to say dumb enough, if you're ignorant enough, if you're poorly studied enough. Ignorant is not stupid. Ignorant is uninformed. But ignorance combined with fear, that's deadly. That's called suicide. Yeah, give me the vaccine. Give me all the boosters. And yeah, all these variants are very deadly. We've never had mutations in the history of mankind before, but now we've got mutations. I tell you, this is one of the biggest Darwin stupid calls we've ever had in human existence. So back to the repo window. It gave us the Corona jump shift. Now, for those who play bridge, They did a jump shift in suit. They went from the banker suit to the doctor suit. Another thing happened, a remarkable event in 2021. Again, end of year. These things seem to happen end of year. The Treasury bill was rejected at the Long Beach ports. So what do? We faced an import shutdown. We faced an economic strangle. So what do? We did a jump shift from the financial to the war. Let's go have a good war in Ukraine. So they incited a war in Ukraine. What did that do? It opened up the, the mills for printing money. Aid to Ukraine. There's so many things I could talk about with Ukraine. I'd rather not open that area. I'd like to focus on this point that we are now facing the third event because Long Beach is empty. I had a client who recently was on a cruise liner, and he gave me 5 photographs of Long Beach in the first week of December, and it is empty. It's never empty. It's the busiest port in the United States. It's the biggest port in the United States. It's got 7 miles of port facilities with these big things that grab a container and move it over and put it on a truck. That they move cargo. Okay. So the first event was the closed repo window 2019. The second event was the close down of the Long Beach ports for refusal of Treasury bill in 2021. And now we've got a new crisis that's going to be very difficult to cover up. It is poorly bid, poorly attended Treasury bond auctions. Now, I'm trying to answer your question. I'm doing I'm hitting the scenic route to do it. There's another, here's my pièce de résistance. I'm ready for it now. I've set the table. In the last 5-6 years, the bond investors for U.S. government debt have been very skittish and very distrustful of the U.S. government integrity, and they realize that we should have been downgraded. We're not AAA. Who are you kidding? Are you stupid? The answer is often, yeah, they're stupid. Even if they're financial professionals, they're stupid. I got stories that display their stupidity. What we've got now is a situation where the maturity length of time in recent Treasury issuances, recent Treasury sales, they had to do shorter term. Imagine 5 years ago, they had to do a lot of 2-year Treasuries. 3 years ago, they did a lot of 2-year Treasuries. 2 years ago, they did a lot of 2-year Treasuries. 5 years ago, they did a lot of 5-year Treasuries. And this year, we have to roll over and finance $7 trillion. This year, in addition to our current deficit of $1.5 trillion. We've got to fund $8.5 trillion. We've got to fund $700 billion a month, and we have trouble with 100. So you ask me how much time we have, Alpha? I say not much. Not much. I think we're going to, I called this 2 months ago. I said, we're going to hand money under the table to our friends, and they're going to do bidding on our bonds, and it'll come back under the table again on our balance sheets. Watch the tick reports. How many Americans know what a tick report is? Treasury International Capital. It's how many treasuries in volume foreign countries own. I think we're playing games with that right now. Right now. Watch Ireland, Belgium, Cayman, Bermuda, all the UK, US vassal states. They're bidding with our money handed under the table. It's going to come out. We also have other important thing. I just learned this term. It's called the tail on an option. It's the difference between the actual final bond yield and what the lowest bid was. So who's the dumbest guy in the room versus the consensus? What's the difference between the dumbest guy and the consensus? It's called the tail. Okay. Anyone who bids really low on a treasury, not much up there, not much. This is now an issue. We're setting records on the tail. Okay. This means we're in trouble. We had a problem in August because we added to the treasury supply, which meant we had bigger deficits than we admitted, had to finance them. Okay, U.S. government has a debt, they securitize the debt, they offer a bond, they look for a bidder, they get paid for it, and we finance the government deficit. Here's why we're going to print money to cover our own deficit. The military is going to say, you shut us down, we'll kill your ass. Get it? Don't shut down the government. Don't shut down the Pentagon. You cover the deficit with printed money and you keep funding the Pentagon, or we'll kill your ass. And we'll make it look like an accident. Are they good at that? Ask the Clinton Foundation victims. There are 160 people, most of whom have committed suicide, some of them with a second gunshot wound to the chest. All right. You ask, how much time do we have? I have been saying now with my own, just, it's my analytic instinct. It's my colleagues in conversation. It's events coming down the road. And it's also another item, record-setting selling of treasury bonds by foreign central banks. They say foreign central bank entities. Okay, that includes monarchy sovereign wealth funds like Saudi, UAE, Qatar, Oman. They're very wealthy. They hold a lot of treasury bonds. Saudi is dumping treasury bonds. Japan is selling treasury bonds. We're setting okay, just look at the extremes. We're setting records with foreign selling of foreign selling of treasury bonds. And we're coming in with incredible record-setting supply. Very few buyers, record historic supply. It's a crash. It's a crash, and I think we're going to start seeing evidence of the crash in a big way by March. I do not think we get past June without a major event on the order of Lehman. I've been saying that what we're facing now, Alpha, is Lehman times 5 in magnitude. Lehman was big. This is much bigger. We've had debt downgrades in a strange form. What they do is they say, we're reducing our outlook on U.S. government debt. Well, what does that mean? You do a downgrade? Well, not really. You still got your AAA, but you still got your AA plus, AA minus, or gosh, I have it on my wall. I got 100 little items on my wall. I can't find it. I don't care. But they did a reduction on future outlook. Now, go back to 2010, and you'll find that Standard & Poor did a downgrade of U.S. government debt, and the Wall Street bankers threatened to kill their executive. Okay, this is how it works. We don't have just a government. We have an organized crime center. It's called a cabal. This is organized crime, and they've organized narcotics, bankers, military, and news. And that's what's behind the U.S. government defense and the U.S. dollar defense. I think we're going to see an event by March, and we're going to see a crisis by June. You wanted dates? I give dates. You know, I'm not saying these are rocks solid. They're going to happen, no doubt about it. I'm saying these are dates to watch. These are dates like by March. Let's look for some extraordinary events in the bond market from difficulty in financing our debt. Now, if the military convinces the Fed, they don't need any convincing. They've always printed money to cover debt. It's not even a decision. They talk about options, but they always print money to cover the debt. When they do, we're going to get extraordinary price inflation. You think it was bad a year ago? 17, 18%, which